Endurance Technologies in focus this morning. They posted a mixed Q2 with consolidated revenues growing steadily but standalone margins falling short of expectations. Before we get to the management, we're speaking to the group CFO this morning at Endurance Tech. Puneet joining in to set that conversation up.
Well, thank you for that. As you rightly said, the standalone margins were impacted in this particular quarter. That was one of the biggest highlights coming out of the four numbers. But there are three other key things that you need to watch out for. There are media reports speculating that the ABS norms, which are expected to come in from January of 2026, could likely be delayed. The key question is, what could it be having a revenue impact on something like an Endurance Tech, which was building in a key growth area from this? That'll be the first key thing I'll be watching out for. The other will be the company's target of increasing the company's four-wheeler business to 45% of the company's revenue from roughly about 28 to 29%, which we saw in quarter two. How would that largely be happening? Because it's more of a business which does very well in Europe, but in India it has very low contribution in terms of revenue. So that will be the second key thing I'll be watching out for. And finally, in what they see as disc brakes as the third new opportunity because of ABS as well. When is the new capacity coming in and what is the revenue potential? So these will be the three things I'll be watching out for. But mixed performance, as you rightly said, based on margins in quarter two of FY26.
Stock is up 3.2% in trade. We're joined by the management of the company, Gopal Sastry, who's the Group Chief Financial Officer of the company. Sir, thanks so much for taking the time. Mr. Sastry, let me start by asking about that opportunity, which I think a lot of investors, your own and otherwise, are quite interested in, which is that ABS opportunity. Is there a delay at all from that January 2026 timeline that was initially thought of? And what is the opportunity that you see and the capacity that you're building up?
As far as what we hear about the ABS topic, and you see majority of the news coverage only says that sources are telling us. So we will still wait for the official communication about that. And we'll see how things pan out post getting the official communication. However, in terms of the growth story, which we have been charting for ourselves for the future, it is being independent of this ABS regulation also. So the way we have been acquiring orders, 4,600 in the last 4 or 5 years, and majority of that new business, close to 4,000 crores is new business, and a lot of it going into startup business within the last few quarters. The growth story is intact, and all other strategic plans which the company has in place, they're all intact. Now, the ABS was definitely an icing on the cake. It does not impact our revenue plans, but we have to see how the regulation is actually being worded, and we have to wait for the official communication.
Let me ask about your conservative estimates, though, for FY27, assuming that things go as per planned. You've already talked about your growth rates, not even accounting for ABS, which sounds fantastic, sir. But what can it add to FY27, even on a conservative estimate?
So I will not be able to give you the exact numbers, but if you see, the company always had been working with an asset turns, about our investments close to 3, 4. That's been the way we have been utilizing our assets. And our Capex had been significant in the last financial year. Against a normal run rate of 350 crores per annum, we did about 611 crores. And a lot of it is in new plants. We are coming out with a plan for alloy wheels in the Bidkin area of Aurangabad, which went into startup business in October, which we made a public announcement. Another plant making specialty castings for four-wheelers, especially for the export market, will have its start of production in the last quarter of this year. The battery pack manufacturing will have its start of production in the last quarter of this year. We are putting up a new plant for braking systems in the southern part of Chennai, near Chennai. That will have its start of production around Q1, Q2 of next year. So a lot of investments are actually going into startup businesses. Other than this, the R&D facilities, which have a lot of dedicated resources and capabilities for the four-wheeler business, is also fully installed for suspensions. A new R&D facility for braking systems is also being put up in place. And if you look at from the investment perspective, our estimates for the revenue growth are very positive. And also the way our orders and the way the 4,200 crores of RFQ pipeline with which we are responding and also getting nominations, the growth story is positive for us.
Mr. Sastry, just is there a vision around what Endurance could look like 3 years out with all the things that you're doing and with all of the ABS plans, moving away from near-term fluctuations to some bit of stability, both in terms of the size as well as in terms of the return ratios that you could clock in? It could be 2 years out, 3 years out.
See, there is a multi-dimensional approach within the company to see that the returns are always better. And that's very strong management commitment. And of course, the risk of looking at the rearview mirror. But if you look at the way the company has been performing, it is the strength of its management and a continuous effort to do things better. So if you look at our stated whatever we have been stating, the efforts to grow our aftermarket, which is margin accretive, the efforts to see that we have put in a lot of specialty teams to look at our cost structure and do better in material cost, in all other costs. So we would like to spend less, earn more, and thereby improve the return portfolio.
Mr. Sastry, that's true for every company, right? I don't know if there is any company which doesn't want to do that. So, but kudos to you for having done that thus far. But the question that therefore comes to mind is, having done it for thus far and the base being what it is, what is the outlook 3 years out on the points that you mentioned and therefore the results that it could throw up?
See, I could only give you a qualitative answer. And I did mention how the investments are actually going into startup business and they're beginning to earn revenues also. But because as a company, we do not specifically mention the numbers, I could only give you a qualitative answer to say that we definitely are gunning and looking at projections which are strong.
Color, because strong could vary from 12% to 99%. Actually, why 99? It could be 150%, right? So I'm just trying to understand some color. Would you match the growth rates of the past even at a higher base? And would ROC, for example, inch higher from where it is right now?
Let us look at historically the way we have been investing versus what we are investing now and the special initiatives which we are taking right now. There is no reason to believe that we will be worse than what we were earlier, or we will not do as good as we did in the past, or even better. And that's the overall aim and goal. And that's how we are, that's the reason why we are planning the business the way we are planning it today.
Sorry, Alex.
It is a good answer. I will not be able to tell you whether it is well around 50%.
Okay, fine. But for any of the plans or the potential delay any of the plans that Alex was asking about, ABS, etc., does Endurance need to raise any kind of equity capital in the next 6 to 12 months for any exigency or any expansion?
Our cash planning to the extent of the next 5 years, it indicates that we will be able to manage with our internally generated funds.
Okay, sounds good. I don't want to...
Unless there is a very large opportunity coming up from the inorganic side and which we feel that we have to get into, then we will look at options. But as of now, for the kind of growth plans which we have in place, which are robust and strong, we will be able to manage with internally generated funds.
Are you scouting for something though?
That's always been our stated objective, to look at various opportunities. If they come up, we do keep scouting, but we look at the strategic fit and also the cultural fit and also how it will pan out as Endurance as a whole. And if the right things happen, we will go for it.
In India or overseas?
Overseas, we are doing it big time. So if you see this particular quarter, this first half, we benefited hugely by the inorganic growth of acquiring a company called Stefferle, which made our European business close to 31% of our total revenue. And it was an 80 million euro revenue acquisition, very highly profitable. And Europe will continue to do that. In India, we are just waiting for the right opportunity. So it's not that we are not scouting.
Okay. Speaking of... share of revenue, I'm just wondering about the four-wheeler mix and what the aim is to ramp that up to 45% of consolidated revenue. Is that going to be largely an India-focused drive, or is it going to be a combination of Europe plus India? How will that work?
It will be a combination of Europe plus India, but clearly Indian numbers or Indian performance in this against this particular objective will grow, because we already have made mention that We have a technical assistance agreement for suspensions. We do have another technical assistance agreement for braking systems. In the recent past, we did secure orders for drive shafts of four-wheelers. We have secured orders for the braking systems of four-wheelers. The drive shafts actually have gone into production. And we are also looking at a lot of other expansion opportunities, especially the four-wheeler, where we are in the trial, we are running trials for some of the models of the Indian vehicles to see how the suspension should fit. And then it's a gradual progress until it reaches a tipping point. It will be slow, but then there onwards, it will become business as usual.
Business as usual. I do want to ask you about another collaboration that you have, that technical collaboration with MG in Italy. And this is for aluminium forging business, right? What is the current revenue, and do you anticipate a ramp up over the medium term? What is the potential there?
I think you're talking about the FGM for the aluminum forgings, right?
Yeah.
So that actually started as a backward integration. So because we make inverted tech flow, the inverted suspension systems, front forks as they call it, and we started this as a backward integration, and very quickly it is becoming a revenue model on its own. And we have just ordered the 5th new press, and this entire line of this existing 4 presses plus the new one would go into a new location. We are giving it a dedicated space, and we are getting a lot of interest from various OEMs, and because it's a very strong driver for lightweighting, both for the four-wheeler and the two-wheeler market. And recently from one of the European OEMs, we have won an order on that. Very soon, we will be able to give you better projections on how that business looks like. But right now, there is a lot of interest, and we are investing to grow that side of business also.
Just a last question, and I know that Neeraj tried to push you to give us a view of 2 years plus, but then perhaps you can do that for Q3, if not 2 years down the line. Do you anticipate that the margin trajectory that you've shown, and I see it's broadly been in that 13-14% range, do you anticipate an up move in the second half?
See, right now, we are investing on some key capability building. We are having some special projects to improve our aftermarket. We're having some special projects to correct our material costs, and a lot of capability building, a lot of upkeep to the machineries and other things happening. So in Q2, we did see that arithmetically, we had a lower margin as per against the past. But this is arithmetic, and this is something which we sometimes have to invest for a very short term of how do we bring up our capabilities and also spruce up our machinery so that we are ready for the growth as it happens. And growth is happening, as you would see that we have a huge pipeline of orders which we have to start serving. So it will be not right that we don't spend a bit on upkeep and also capability building. We have acquired a lot of talent. A lot of people have joined the company in the areas of four-wheeler R&D, in the areas of strategic management, in the areas of purchasing specialists, because we're also getting into areas which we're not traditionally been in.
So Mr. Sastry, what that means is that there is a ceiling on margins for the near term, right?
I wouldn't say there's a ceiling, because it's not that we are not taking efforts to bring it back to the levels and also grow from there. So the efforts are on, but you will see them actually when the results are announced.
Okay. Fair enough. Mr. Sastry, thanks so much for joining us. Pleasure speaking with you, and look forward to the next chat. All the best.